Welcome back to The Explainer. Today we are tackling an absolute monster of a topic. If you've ever tried to read through a national budget document, you know the drill, right? They are massive, they're incredibly dense, and they are just packed with so much economic jargon that it can easily make your eyes glaze over. But today, we're taking the newly approved Uganda national budget for the 2026-27 financial year, and we're translating it into simple kitchen table realities. We're going to break down all those billions and trillions and figure out exactly what it actually means for the average citizen.
Okay, let's just dive right into this. The total resource envelope for Uganda's next financial year is a staggering 84.39 trillion shillings. I mean, that is just an astronomical number. When we hear figures up in the trillions, it's honestly incredibly hard to conceptualize what that actually means on the ground.
So to actually wrap our heads around this, I want you to think of this 84.39 trillion shillings as the ultimate household budget. Just like a family sitting around the dining room table at the end of the month, the government has a ledger. On one side, they have to figure out what they need to spend just to keep the house running, invest in their kids' futures, and, fix the leaky roof. And on the flip side, they have to figure out how they're actually going to earn the money to pay for it all. Ultimately, the government has to balance what it gives to citizens with what it takes in revenue.
Here is our roadmap for today. 1. The National Household Budget. 2. Investing in the basics. 3. Betting on the future. 4. Changes to your wallet. And 5. The bottom line.
All right. Section 1, the national household budget, the big picture. When a family wants to buy a house, they usually can't just pay for the whole thing in cash all at once, right? They take out a mortgage. They take on a bit of debt to build their future. Well, the national household is really no different. As of December 2025, Uganda's total public debt stood at $34.86 billion. Now, the absolutely crucial point here is how that relates to the overall size of the economy, which is represented by a 53% debt to GDP ratio. To put that simply, imagine your household earns $100 a year. A 53% debt to GDP ratio essentially means that for every dollar you earn, you owe 53 cents. The government projects this to remain sustainable, but it does mean a pretty significant portion of the household income has to be earmarked just to manage that national mortgage.
Moving on to Section 2, investing in the basics, everyday spending. Let's take a look at what the national household is actually buying right now to keep things running smoothly. In a normal family, this would be the equivalent of paying the babysitter, buying groceries, or fixing a broken window. These are the absolute non-negotiables. And this brilliantly illustrates what that looks like at a national scale. It's over 1 trillion shillings for safe water and sanitation. It's over 568 billion to boost salaries for primary and arts teachers. We're looking at a massive 10.21 trillion for security in the rule of law, plus another 173 billion for social protection for vulnerable groups. That is over 13 trillion shillings invested directly into everyday people for essential services.
To actually see what this looks like on the ground, look no further than the cattle restocking initiative in regions like Acholi, Lango, and Teso. The budget specifically targets 16,000 households for this program alone. Each of those households receives the equivalent of 5 million shillings to purchase 2 bulls and 3 heifers. So you see, this isn't just abstract macroeconomics, this is a direct, tangible investment right into a family's livelihood and their ability to generate their own income.
And, the basics also include preparing the house for guests. The budget includes specific allocations for completing critical sports infrastructure, like major stadiums, as Uganda prepares to host the Africa Cup of Nations in 2027. It's a major, near-term expense, completely designed to ensure the country is totally ready for the international spotlight. Next up, Section 3, betting on the future, long-term investments. Because a successful household doesn't just pay for today's groceries, it saves for tomorrow. Think of this next part as the family putting money into a college tuition fund, or maybe taking out a loan to start a family business that will hopefully pay big dividends down the line. To that end, the budget allocates a whopping 1.14 trillion shillings towards science, technology, and innovation, ICT, and the creative industries. The ultimate goal here is long-term economic transformation. Now, what's really interesting here is how this budget directly funds the commercialization of local innovations. Take Kira Motors, for example. It's a huge investment aimed at shifting the country from just consuming imported goods to actually manufacturing and selling its very own high-tech products, like electric vehicles.
And the list of future bets goes on. We're talking over 1 trillion shillings poured into manufacturing and industrial parks, and well over 500 billion into tourism development.
They are funding the establishment of a high-tech city and investing in adding value to raw agricultural and mineral exports. These are highly strategic moves designed to expand the economy so the national household simply has a higher income in the decades to come.
But hold on a second. Let's just pause right here. All of those investments we just talked about, the safe water, the teachers, the cattle, the stadiums, the electric buses, they all cost money. So how exactly is the household paying for all of this? Well, we have to flip the ledger over and take a hard look at the revenue side.
That brings us to Section 4, Changes to Your Wallet and the Cost of Living. If the national budget is a household ledger, domestic revenue is basically the equivalent of the family members chipping in a portion of their monthly salaries to cover the bills. For the 2026/27 financial year, the government has set a domestic revenue target of 45.6 trillion shillings. That is a massive jump from the previous year's 35.7 trillion. To close that gap and actually fund all those future bets and everyday basics, the government has introduced some new tax measures. And this is exactly where you are going to feel the budget directly in your daily life.
For instance, let's talk about clothes. If you rely on imported used clothing, your costs are definitely going up. Parliament approved an increase in the environmental levy on imported used clothing, literally doubling it from 15% to 30%. The stated goal here is twofold: to support local manufacturing and, of course, to generate an additional 40 billion shillings for the national pot.
And here's another direct hit to the consumer wallet: the betting tax. The tax on betting has been bumped up from 20% to 30%. This specific measure is expected to generate an additional 24 billion shillings for the budget. So whether it's everyday clothes or weekend entertainment, the household is essentially asking its members to chip in just a little bit more to cover that incredibly ambitious 84 trillion shilling agenda.
All right, Section 5, the bottom line. Let's wrap this all up. We've looked at the massive overall numbers. We've broken down the everyday spending on people and basics. We've seen those big long-term bets on industry and technology. And we've just seen exactly how tax increases are going to fund it all. It all ultimately ties back to the official theme of this year's budget, which is the full monetization of Uganda's economy, achieved through commercial agriculture, industrialization, digital transformation, and market access. Basically, every policy, from the 5 million shillings for cattle restocking to the double tax on used clothes, is pitched as a necessary step toward this overarching goal of creating a fully monetized industrial economy.
So the ledger is pretty much set. The money's been allocated and the taxes have been officially approved. But the real 84.39 trillion shilling question that remains for every single citizen to evaluate over this next year is this: is the national household spending its money wisely? Will these massive long-term bets actually pay off? And will the everyday citizen truly see the returns in their own personal wallet? That is exactly what we'll be watching closely. Thanks so much for joining me to unpack this explainer. And remember, always keep asking the hard questions.